Hey, hi everyone. Good morning and welcome to our live show. Hope everyone is doing great, guys. Welcome all. Soul Invictus, Jane, Advisor, Guest, Fine, Ron, Saeed, Jimmy, Naveen, Nimesh. Welcome all. Thanks. Thank you all for being here. Please give me number one, guys, if you are able to hear me. See my screen. Wild session today. Crazy big range movement in Nasdaq. Absolutely chaos. You win some, you lose some, you take a hit, you hit back. That is what has happened with us today. But overall, what matters is if your greens are more than reds, you are a winner. So that is what it is about. FOMC day, crazy, fear, greed, all at the same time.
Stop filled.
Yeah, Nvidia coming down almost home into the weekly midpoint. Yeah, almost home. Yeah, we were short, guys, in the market initially, but we got stopped out. Then we got this short. Nvidia helping its way into the weekly midpoint, but Nasdaq may not make a new low, unfortunately. Nasdaq has a good bottom from our levels we were looking for, but yeah, it can stay sideways or dip little bit lower to get Nvidia into its destination. So I think for the longs we'll have to wait. Nvidia hits the midpoint, gets a reaction, that would be a good long. Good morning. Yes, we had both good as well as bad morning. We had few losers and we had lots of winners, but it was nasty. Like we had to be really determined. No, this market is coming down. This market is not staying up. We had to show a lot of conviction on our levels, and then we finally got the winner. It was that kind of a session where you had to be really determined to get that shot. Else, they did every bit first, not by filling the gap. They missed the gap fill on Nasdaq by 7 points, went all the way back up 180 points to make a new session high, then came back down to fill the gap, and the news guy was still searching a reason. What happened? Why did the market drop? Unable to find a reason for this drop. That kind of a session. Yeah, we missed our gap fill on the Nasdaq, daily gap fill by 7 points, went back up 224 points, came right back down 260 points, and now living dangerously. I miss the old music, so what can I do about it? Play the old music. I can play the old music. Now go to bed. Feel sleepy. Apple is coming down very strong, very crazy, like a rock. Right from our weekly expected move upper edge. SpaceX also down, yes, 6%, 7% now. That opening hour was worthy of any FOMC press conference. Powell would have been very proud of that one. Yeah, absolutely. One heck of a confusion, big range. But the good thing is, proud thing is for our levels, right? There was nothing in between. There was nothing, no levels in between the market open and the lows. We had nothing in between for 170 points. Generally, that doesn't happen. That we don't have level for 170 points. There's always something, but there was none today. 170, 80 points, there was a big vacuum in terms of our level. So it was expected to be very wild open. ES gave it away. It made a new low, took out London lows, had a responsibility of holding the structure, failed. that confirmed that short was going to work. I immediately increased my size and we got a big winner. Yeah, summer may not be as calm because of the big size of the product now. $30,000 product. I mean, at the end, it's nothing, guys. Nasdaq is up 0.23%, ES is down 0.18%. It's more of a flat day so far. But in that flat day, who participated at the open in the first one and a half hour, we all know what went on. In that, Nasdaq being up half, or not even half, it's just a quarter of a percentage point. ES down 0.15. It's a rounding error. It's basically flat market, but we know what happened. It looks calm on the out, you know, but inside we know what happened in that half a percentage. Yeah, that is with the new paradigm members group. We start at zero. The profit you see, it's a daily profit between 9 a.m. till 11 a.m. and the loss, both profit as well as loss, whatever it is, it's all live between 9 and 11 with new paradigm members, and after 11 it's all public. I might short this. It's a scalp as of now for scalping. How do your accounts have different value? Because I copy it in 3 or 4 sets. Like these accounts were in the one set,
according to
so they have same
the
PNL.
US and Iran discussed moving up the signing of the deal, according to sources. So the US and Iran and the mediators are discussing holding the signing of the memorandum of understanding, currently scheduled for Friday, moving that to as early as Wednesday, according to a diplomat from one of the mediating countries and a second source familiar with the discussions.
Yeah, copy it in a group of 3 mostly. You can see, right, these 3 accounts were in the one group, so same PNL. These 3 accounts were in the second group, same PNL. This couple of accounts in the same group, and one account can share between all the accounts. That is the master account. Yeah, I don't risk all the accounts in one trade. No matter how good the strategy is, anybody can lose any one trade. You cannot have one losing trade destroy your entire trading session. We did have losing trades. One.
So we have posted the article by Axios on the feed for those interested. So again, in this, it does say that the US and Iran discuss moving up the signing of the deal to today.
Stuff filled.
I do use ATM strategy, but yeah, I do move my stop losses manually. It's not auto trailing. ATM strategy is there just to place the initial take profit and stop loss. I move it on the DOM. It is much quicker than moving it on the chart for me. Weekly midpoint, yeah. After the FOMC possible, we could go for the weekly midpoint. Oh, 30,050.
Stuff filled.
And so keep in mind, we're still waiting on the start of the Trump press conference at the G7.
So market at pause here, going sideways. So which way it is going to bluff? Like showing strength right now, gather longs and then again do a rug pull. Because there is room, it can go back to 480 area. Why not? As it breaks above this VWAP. Very tight range, small fluctuations. And then the sudden burst or break one way or the other. Emily exclamation join. Click on this link. Sometimes which country you are based in, you may not see the join button based on country. There's the link, join this channel to get access to the perks. When you click on that link, do you see this join button here? If you see the join button, then you will be able to become member. . . 。  . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . .
Shares of US big banks touching record highs here. Morgan Stanley are up 2.6, Goldman up 2.3, Citi 1.8. Hezbollah chief says the ceiling to be reached in negotiations with Israel is a situation of reciprocal security. And Hezbollah chief rejects the pilot zones agreed in the US brokered talks between Lebanon and Israel.
Yeah, so might keep there is, I mean, it is possible to pop into, we know the area 480, 486, 500 zone one more time. Top of the hour.
So keep in mind the Trump G7 press conference is now about to begin. The live video is on the feed.
Stop filled.
Trump just repeating, we reached an agreement with Iran on Sunday. So again, speaking at the G7 press conference now. Trump says, I think Iran will behave much differently.
Thanks. Yeah, I mean, keep the size small. If you're trading micro, have clear idea what the market is capable of doing. Even though you may not be able to trade exactly time the tops and bottom, but in general, if you are aware
Target filled.
what this market is capable of going to, what this market is capable of selling off into, it removes all the instant decision making. You already know that this market today basically ES is flat, guys. Dow Jones up 0.3. We haven't swung into our daily high or daily low. This market is capable of moving big. Keep the size small. Wait for the FOMC now.
Trump says Israel's PM Netanyahu gets a little excited sometimes. Netanyahu and I have disputes over Lebanon. The Russell 2000 index rises 1.2%.
Gut feeling, there
Trump
will be
says,
no
I'll
rate
give you
change.
the
You don't need to have
MOU
gut feeling.
out
There is a
so you
tool
can read
available.
it. So that's Trump saying, I'll give out the MOU so you can read it.
Here's the link.
And
That
repeats
tool
that if
tells
the
you
Iran deal is not done in 60 days, it's back to bombing.
that there is a 99.6% probability that there will be no rate change. So current rate is 350 to 375 basis point. 99.6% probability that there will be no rate cut. Okay, so
That's
your
Trump
gut
saying, I
feeling.
don't want to bomb Iran again, but I might have to.
You don't need to do. In fact, you don't need to have gut feeling for the next July. Also, in July, the rate is going to stay same. The probability from the market is 91%. It has probability all the way till December. Okay. So you can see, right, current rate 350 to 375 basis point. That's 90% probability. 99 today. Next month 91% probability. Rate stays same. September there is, you can see, right, 29% chance that they could hike one rate. So this could change today because there is a summary of economic projection which is going to come out, which will give Fed's dot plot. They will all plot a small dot, how many rate hike or rate cut they see, all the 20 Fed members. So there is a tool available. Market hates surprises, so market tries to price in everything in advance, and if there is a sudden surprise, then they react. Yeah, there is a CME Fed Watch tool. This is the link which gives you probability of rate hike, rate cut for next, at least, it is there until 2027 year end. So your next 18 months of probability is already, and it gets updated every day as the market goes up, downs, interest rate on the 10-year mortgages changes. It all reflects in that probability tool every day. It will change today as well after the FOMC. Mic is off. I don't think mic is off. You need to refresh. Can you guys hear me? I think you just need to refresh, Elliot. So I don't think we'll have much action here until 2 p.m. After 2 p.m., especially after 2:30 p.m., we should have a lot of price movements.
Trump on Russia and China nuclear weapons says ought to make a deal. Trump on the Iran deal saying it will be signed shortly. So again, that's Trump in line with what the Axios report earlier was saying that the Iran deal will be signed shortly. But he's saying that it could be signed tomorrow or the next day. So again, the Axios report implied an early signing potentially today. Trump now saying the deal could be signed tomorrow or the next day. And Trump saying that we will most likely sign a deal. Trump saying that he sent a copy of the Iran deal to Israel. And Trump saying that Israel can do better with respect to Hezbollah.
So we are just chopping around VWAP here, nothing much happening.
Trump says technical discussions on nuclear stockpiles will begin immediately. Trump believes the current Iran leaders represent a regime change.
So overall, Nasdaq is stronger, is leading ES. That's why you have to be respectful when Nasdaq is trying to lead ES higher.
Trump says we will talk about ballistic missiles and terrorist proxies.
Yeah, instead of shorting, I think if it dips, buying that dip is going to be easier, even for a scalp. So let me go back, grab my food. I'll be back in 2 minutes. It's boring, man. It's very boring to trade for a few points like this. It's frustrating. I already traded a lot here in this zone. Yeah, and unless there is a weakness, there is no point in shorting here. We need to see some weakness in the market. Nvidia also caught a bid. Nvidia has stopped selling. Apple has a nice bid. Broadcom is rallying. Tesla is rallying. There are few tech which are weak, like Microsoft, Meta. Amazon also catching a bid now. So apart from Microsoft and Meta, everything else has a bid in the tech. So somehow if they do a small rug pull, it again backs off. Buying that dip here would be much easier. Back in 2 minutes. Okay, guys, I'm back with my food. I'll be on mute next few minutes while finish lunch. Thank you. So finally we are getting a small pullback now.
Trump says $300 billion fund for Iran is only if they do things right. So Trump, just going over points we have already heard in the Q&A section now, says, I guess we have to give Iran its money back. Trump says the dollar has become very strong under me. Trump says if we didn't return Iran's money, nobody would ever invest in the dollar again.
Mhm. So I try to limit my size to 7 or 8 micros. That is enough. 8 micro. That is my preferred sizing on this 150k account, because the market is very dangerous now with Nasdaq at 30,000 and above. It moves big. Cannot handle one E-mini also. Drawdowns can be huge and very quickly. And the other problem we have is we don't have many levels today. Even in fact, this trade I'm taking is without any levels. We don't have any levels for a wide 200 points. Yeah, we don't have any level here. For 168 point, there is no level below or no level above. It's a complete vacuum zone we are dealing with today.
Contacts Axios Anthropic's Amodi at Meta's Wang attended AI meeting. Trump on Iran deal says don't need enforceable no nuclear in deal. Again, don't need enforceable non-nuclear in the deal. UKMTO says it received a report of an incident 105 nautical miles northeast of Aden in Yemen. UKMTO adds that a vessel has been approached within 4 meters and fired upon by 2 skiffs with an unknown number of armed persons on board. So UKMTO says the vessel has deployed security team and returned fire, and the suspect vessels have disengaged and are in the excess of 4 nautical miles of the vessel.
So it looks like this big range which you got at the open
Trump
is
says you
going to
can't
be
cover everything in a document.
a big factor going into the FOMC. It is getting repeated over and over again.
So let's take a look ahead then of the interest rate decision at the top of the hour for the US. Just take a look at then some commentary from JP Morgan. The they said the Fed is staying on hold in line with the OIS. And after recent improvements in incoming labor market data, we expect the Fed will remove its implicit easing bias both and from the statement and from the previous 2026 median dot, which indicated 1 ease this year. This will be the first Fed meeting with Walsh as chair. We don't expect a substantial regime change in his communication, and we think he's built up some credibility, so he shouldn't be dovish during the conference. We continue to see the Fed hike in September of next year against market pricing earlier, more hikes. 17 basis point hikes cumulative priced by December 2026 and around 30 basis points by mid 2027. Italy's Tajani says Iran is to ensure ships safe during departure and coming hours.
So yeah, trading without the levels I told you, right? 168 points fully getting utilized.
Trump says other nations now to be part of the military force in the Strait.
One more. I'll have to manage those 2 micros. Adding 2 micros, but I'll have to recycle those 2 micros.
Also, Conte Axios, they say OpenAI's Altman and Google's Hasibas attended the AI meeting.
Unbelievable. The accent does not give me a feel. Trump says I might stick around for Iran signing. Whoa, man.
Senior US official now speaking about the Iran deal says that the Iran deal to give US a dial tied to Iran behavior. US partners to develop plan with at least $300 billion. So again, US and partners to develop plan with at least $300 billion. Iran already starting to lift its blockade. Iran to charge no tolls for 60 days until under deal. So again, Iran to charge no tolls for 60 days under deal. Iran to immediately begin removal of blockade. Iran deal to seek final deal in 60 days and extendable.
Always have a stop loss, man.
US memorandum of understanding text hasn't changed since Sunday. US to work closely with IEA on Iran inspections, and US Treasury to issue waivers for Iran under deal.
Have a stop loss, man. Without stop loss, you cannot operate in this market. What a liquidity grab.
Also from senior US official, they say that if we aren't able to make a deal, Trump is not afraid to use tools at his disposal. We have had constant contact with Israel. That concludes comments from Trump. According to Iraq's Basra Oil, Iraq's oil output now 1.5 million barrels per day, up from 1 million barrels per day. So southern Iraq oil output jumps as tankers arrive, according to Basra's oil company. Iran's foreign ministry spokesperson says signing could be done by the US and Iran presidents. The idea is still under review, according to state media.
I hope it gets done. All this drama of signing, not signing, fucking has been going on forever. Unbelievable. So I have two groups. One is a members group, New Paradigm members, that starts at 9 a.m. from 9 a.m. Eastern till 11 a.m. Eastern. 11 a.m. Eastern, I am here on the live stream for everyone, public live stream. Yeah, that scanning is the order fill alert. It's people who requested put some sound when you enter or exit a trade. We didn't want an order filled sound so many times, so we put this grocery store scanning alert. Done? Is it over this pop or there's more to it? So guys, today it's wild for us. We don't have any levels here. You can see, I don't know. Yeah, it's very wild for us. There's a big zone here where we don't have any levels. So that's the reason why there's no escape here. It is going to swing big in this area. So unfortunately today is the day where we have to tackle this wide range with little wider stop losses, or spreading your order, or averaging down or averaging up, or scaling out when it works in your favor. You cannot tackle this wide range without level. See, that's the thing. If we don't have a level, we can't trade. We need levels. No levels today. Unfortunately, the range is so huge, there is nothing significant from the institution in between. That's why it is swinging big. If there were some institutional levels here in between, we would not have these wild swings here. That's why our PNL is also fluctuating huge today. Generally, we try to keep it like under $1,000 or $1,000 above. Today we are swinging 2,000 and even beyond.
Stop filled.
So a reminder, at the top of the hour, we get the Fed interest rate decision where the Fed is expected to keep rates unchanged at 3.75%. Just look at some other bits of investment banking views now. Bank of America, they said that we expect the Fed to keep the policy rates at 3.5 to 3.75% in June and remove the easing bias from the statement. We don't anticipate any descents. The S&P should show high inflation, a lower U rate, and no cuts this year. A few policymakers will likely project hikes. We don't think Warsh will submit forecast. We expect him to lean dovish in the presser, arguing 1, supply shocks are on and offs. Supply shocks are one-offs. 2, Fed should be forward-looking on AI disinflation. And 3, trimmed mean PCE and wage inflation don't look problematic. Also, they say that will there even be an SEP in June? We think so. Warsh doesn't like forward guidance and appears he wouldn't need a formal vote to get rid of the SEP. In theory, when the Fed concluded its review of communications last year, Powell said that there weren't any proposed changes that the majority of the FMC supported. So if Warsh were to do away with the SEP entirely, he would risk antagonizing most of his colleagues. Instead, the path of least resistance for Warsh would be to decline to submit his own forecast. He could argue that he simply didn't have enough time to work on with staff.
Yeah, nasty, nasty day today.
According to Israel's Hayom News, Israel wants to accelerate discussions with Lebanon and reach an agreement as soon as possible, even before the formation of a full American-Iranian agreement. So Israel's Hayom News adds that the goal, an agreement with Lebanon and the auspices of the US, will remove the table the Iranian demand for Israeli withdrawal as condition for an agreement with the Americans. JP Morgan's analyst Michelle says the question for Wash is, what does regime change mean? This is just JP Morgan head of global fixed income, Michelle, currently speaking. JP Morgan's Michelle says it's not an economy where you can cut rates. JP Morgan's Bob Michelle says if they drop the easing bias, there won't be dissents. Michelle adds that I would be surprised by either hawkish or dovish tilt. Iran's foreign ministry spokesperson says on Strait of Hormuz it's been agreed to return maritime traffic to normal in a certain period of time. Also, Foreign Ministry spokesperson says this is our responsibility and only we will carry it out. There will be no need for participation or intervention from other parties. And Iran and Oman will develop a mechanism for the strait, and we will exchange views with other nations when needed.
Yes, we are just waiting now for FOMC 2 p.m. and press conference. Back to that chop area. Yeah, I rotate between the accounts, and in given point of time I only copy 3 accounts or 2 sometimes. So yeah, that way when I lose I don't impact all the accounts, and if it is getting too volatile and I have less drawdown, I completely leave that account out of the copier. And when things normalize and I feel confident I want to recover that drawdown, I then again put them back in the trade copier with the lesser size. Size also you can control. In the trade copier you can mention that this trade you want to copy 1 micro to 1 micro, or you want to have a ratio that 1 micro in the main account has 3 micros in the follower account. You can do that. But generally you will see 2 or 3 accounts have a similar kind of a loss or profit, and when it is too much, like I have to significantly reduce the size in some account which has lost more money. because their drawdown room is less. Like for this account 2400 loss, obviously drawdown room is less. I would copy less number of contract here. I can still copy equal number of contract in these accounts where it is a minor loss. 300 500 should be able to recover with 1 or 2 trades. Yeah, it's more of trade management, drawdown management. Yeah, based on my levels, like if it is masters level or new paradigm level, will have more confidence on that trade. If we are going for the weekly, then I can go for the full size. I may have planned for that day. Generally these days I am saying, right, I don't want to go beyond 8 micros because Nasdaq moves big. It's a bigger product now. It's no longer $14,000-$15,000 product. It's a $30,000 product. It moves 300-400 point. It is always in the big range, especially if there is a sell-off. So I don't want to cross 10 micros threshold now. I will never trade E-minis. Not in Nasdaq. Yes, yeah, I can still think of trading E-minis if I want. Nasdaq, I'm not trading E-minis. It's changed. The game is changed now. Either we need to have big drawdowns. We need to have $7,000, $8,000, $10,000 drawdown room. To $2,000-$3,000 drawdown room is not enough to trade E-minis. No, we again took one loss. There was some sudden big drop. It stopped us out, so we took again drawdown. We were almost on the verge of recovering the loss, and we took this big red candle. There was some news, Iran saying that the deal can be signed, but we are still reviewing, something like that. And the algos reacted, and it was back above. After stopping us out, it was right back up. But obviously I cannot trade the same size in those accounts where I took drawdown. I had to size down. So win was with the smaller, loss was bigger, win was small. Even though we were able to get a winner, but it was a small win versus big loss. But yeah, still very happy we had a stop loss because that could have kept going down.
General's US research head Rajapal,
we had a stop loss
about the Fed, says we're not really expecting a lot of changes.
I always have a stop loss, guys. There is zero trade which I take without a stop loss. It is a must. We even though our analysis could be good, levels could be good, but sudden breaking news, big flush or big squeeze can happen anytime in the market. Cannot trade without stop loss.
What we see in the dot may be market moving.
Target filled.
Minutes ago now to get the Fed interest rate decision. Forecast is for no change, prior 3.75%. We're expecting the rate statement alongside the summary of economic projections, the SEP. Fed median rate forecast for next year 3.375%, prior 3.125%. Median rate forecast for the next 2 years, forecast 3.125%, unchanged from the prior. For the long run, also unchanged from the prior 3.125%. And for the current forecast is 3.625%, prior was 3.375%. Mind later on we get the FMC press conference at 2:30 with Fed's Walsh. So looking at the final bit now of research from research bit here, Citi says our economists expect the removal of the Fed's easing bias from the statement and 2026 median dot should show no cuts. This could be countered by a dovish Walsh who could keep the door open for further rate cuts. We retain our base case of 325 basis point cuts starting in September. Comments from Rajappa says core inflation would be the real concern for the Fed. JP Morgan's Michelle says oil shock is somewhat transitory. Sfars News, citing an informed source, says that Iran has not announced its agreement to the proposal. Again, they also say that a proposal for electronic signing of Iran-US Memorandum of Understanding has been raised before the trip to Geneva.
So finally it is making a move. Yeah, today it doesn't move without stop losses. Unless it gets everyone really bearish, it doesn't move up. Unless it gets everyone too bullish, it cannot do a rug pull. There is a constant bluff in the market today. Will it fill gap today? Which gap? It's already up 140. It already filled the gap. You mean to say weekly, Friday? Depends, right? We don't know how this Kevin Walsh will come across in his first press conference. Is he going to be very dovish, very hawkish? Will surely send the market selling into the weekly midpoint.
5 minutes ago now to get the Fed rate decision, where they're expecting no change. Forecast for the median rate for the next year, 3.375%, prior 3.125%. Next 2 years, median rate forecast of 3.125%, unchanged from the prior. Long run, unchanged from the prior as well at 3.125%. And median rate forecast for current year, 3.625%, prior 3.375%. But now we get the rate statement and the SCP.
It's going to be a big suspense with this guy. He's appointed by Trump, so there has to be certain level of understanding. He cannot be very hawkish. But if he comes, firing all guns, we don't want that. What was going on between Trump and Powell.
One minute ago now to get the US interest rate decision. Ten seconds. No change. Rate remains unchanged at 3.75% as expected. Seeing upside movement to the dollar, downside movement on the S&P 500. Fed median rate forecast for next year 3.625%, higher than forecast of 3.375%. Next 2 years, forecast at 3.375%, higher than forecast of 3.125%. Median rate forecast for the long run 3.063%, lower than forecast of 3.125%. Median rate forecast for the current year 3.75%, higher than forecast of 3.625%. From the Federal Reserve says job gains have kept pace with the workforce. 17 of the 19 Fed officials submitted rate projections for 2028. Fed says inflation remains elevated and relative to 2% goal, in part reflecting supply shocks that have caused price increases in certain sectors, including energy. Fed policymakers see 2.2% GDP growth this year versus 2.4% in March, and see longer-run growth at 2%, unchanged from March. Fed says economic activity expanding at solid pace despite elevated uncertainty that owes in part to Middle East conflict. Productivity growth and capital investment are strong. Job gains have kept pace with the workforce, and unemployment rate has changed little. So the Fed's vote in favor of policy was unanimous. Fed committee reaffirmed policy of maintaining ample reserves in the banking system, instructs open market desk to increase securities holding when appropriate. The Fed says inflation remains elevated, partly due to supply shocks. Also, again, just with the Fed, 9 of the 18 FOMC participants pencil in 2026 rate hike. Also, the Fed removes a statement reference to additional rate adjustments. And the Fed says the committee will deliver price stability. So just go over that summary then. Fed keep rates unchanged, but expectations for next year, next 2 years, and current rate expectations higher than expected. Also, you had 9 of 18 FOMC participants pencil in 2026 rate hike. Also from the S&P, inflation remains elevated relative to 2% goal, in part reflecting supply shocks that have caused price increases in certain sectors, including energy. Fed boosts median 2026 core PCE projection to 3.3% from 2.7%.
So are we going for the weekly midpoint already?
So seeing traders price in additional Fed tightening after dots revised. JP Morgan's Michelle says this is a hawkish tilt from the committee. Michelle adds that I didn't think half would project a rate hike. This trade is now fully pricing quarter-point Fed rate hike by the year end.
We may be open. You have to be open to short the market.
JP Morgan's Michelle says nobody in the FMC is thinking inflation will be transitory. Seeing yield on US 10-year treasuries rising after Fed statement, yield last up by about 4.5 basis points, and yield on 2-year US treasuries rise after Fed statement, yield up about 8 basis points at about 4.13%. JP Morgan's Michelle says, I didn't think half would project a rate hike. So seeing again Nasdaq 100 falling as much as 0.2%, S&P 500 down as much as 0.6%.
Target filled. Stop
Also from
filled.
PIMCO's advisor Clarida says that I'm not surprised Walsh did not submit a dot. We're seeing keep an eye on gold turning negative last down 0.5% off the back of the more hawkish than expected Federal Reserve.
So midpoints are coming, guys, either on ES, Nasdaq.
JP Morgan's Michelle says the Fed is getting the US ready for rate hikes.
They are squeezing shorts. Uh, okay, finally.
Seeing the yen falling to session low against the US dollar after the FMC.
The Nasdaq 100 index briefly turns flat. Spot gold drops more than 1%.
So we'll take a loss as it breaks above this area of 310. Yeah.
Stop filled.
I'm still interested in short. We got squeezed out of our short position, but doesn't mean that I'm convinced that market is going up. Yeah, it's during the volatility it's possible because it can squeeze the short, even though it may not be ready to be positive or go back up all the way. But since the shorts are there and their stop losses, it can squeeze them. Okay, let's prepare for
Stop filled.
Mr. Wash.
JP Morgan's Michelle says the Fed telling us we're not at neutral. Short-term interest rate futures now pricing bigger chance of a Fed hike than a hold by September. And a reminder, in 10 minutes' time, we're expecting the FOMC press conference with Fed Chair Walsh. JP Morgan's Michelle says thinks it's possible to have 2 rate hikes this year.
So we did the mistake of sizing up too much on that previous shot. It was just squeezing. Doesn't mean that it was going all the way back up. It was still coming down, but temporarily they can squeeze. This thing is coming down, guys, making a new low today.
reminder, in 5 minutes' time, we expect a new FOMC press conference. We do have the video on the feed for those interested.
Stop filled. Stop filled.
Surely expecting comments from Fed Chair Walsh at the FOMC press conference. Press conference has now begun.
Good day. It's an honor, a true honor to be back at the Federal Reserve and to take up this duty at a time of such consequence.
NYMEX WTI crude July futures settle at $76.79 a barrel, up 74 cents or 0.97%.
And I've listened closely to my fellow FOMC members, heard a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5 to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something: a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, refrained from offering any projections of my own, consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PCE inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Howard Schneider.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall end, hopefully most, if not all of them, concluding by year end.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
Thank you so much. Colby Swift from the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
Sure. So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like an encouragement for me to give forward guidance. We've dropped forward guidance.
Stop filled.
Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that will be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and forecasts that are coming down the pipeline.
Yeah. I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market, but broadly I would say there, Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
You said you don't like forward guidance. You dropped it from the statement this time, but with the dot plot, 9 members suggested that they want a rate increase by the end of the year, and the markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of what the dot plot's future is?
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability. And there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications, what is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we have something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
Hi, Chris Rugaber at Associated Press. Thanks for
Stop, Phil.
questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did, so let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. That paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trimmed the mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question. So let me say I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, a national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this, almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on the first Friday after the month, the payroll index or something else. That might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time. I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
Edward. Thanks. Welcome, Mr. Chairman. Edward Lawrence with Fox Business. So if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
So I think financial markets perform best when
I'll be back in 2 minutes.
to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data, they'll come with better information through market prices to us. We can make more informed decisions with ultimately the goal that I said at the outset, deliver on the price stability objective that Congress told us to do and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. This is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered the discussion, deepened it, and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Thanks a lot, Claire Jones, Financial Times. Coming to this blind, reading this very nice short statement that I think we've all appreciated in the room, one might wonder why you didn't raise rates today, considering what you're saying here about the risks to US inflation and your mandate. I guess, why not, and what would you need to see in order to get to that place? And secondly, on your task forces, are there any best practices at other central banks that you'd consider looking at? Thank you.
Yeah. I'm glad they're in the practice of giving you two questions, because my answer to your first question was going to be very curt. I've got nothing more to say than the statement itself. And to the point of the question I got before, market reactions to what we say unfiltered, I think is more helpful than having delivered a statement, me then improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life. Best practice, find the best minds. Ensure that the task forces have a range of people, both by backgrounds and predispositions, so they too can have a bit of a family fight. Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for, haven't done the final roll call, some of the most significant talent we have in the building and across the reserve banks on each of these, and in some sense seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical central bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. Administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
Just a quick follow-up on your markets point. If you look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the 2-year yield is saying as well?
We were in such a good place. This is why we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last 30 or 60 minutes. What we've given markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
Hi there, Chairman Warsh. Brian Chung with NBC News. Thank you for taking our questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go. So for the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job, so I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first order consequences to what we're doing. But we do have a really important job there, and it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third order effects. That's our job, that's our commitment, that's our capability, and we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the president since you're swearing in?
So on the president, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast, so I don't think I can deny that. The long tradition at the central bank is that the Fed chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of them.
So we sold off.
I believe he's overseas this week, so this will be the
Never
exception
going to
to
stay
rule.
up.
I think they're very useful discussions. The central bank's objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities. The way I think about it is this central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens, and my meetings with Secretary Besson to this point have helped widen that aperture. So we're aware of things that could affect our day job, even if it isn't.
Steve Leisman, CNBC. Mr. Chair, thank you, Mr. Chairman, thank you for taking my question. You had said in the before you became chairman that you thought productivity was a reason why the Federal Reserve could lower interest rates. Do you still believe that to be the case?
So the committee had a discussion of productivity today. AI came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks. I take both of those very seriously. You may have heard me say before that AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to be better off in that. Now, to bring that back to the conduct of policy, timing, scale, speed, implications for output and employment, it's one of the things we have a task force to do.
If you don't mind a follow-up from the other side, which is that when you look at the strong job growth that's out there, the elevated inflation, GDP seems to be going pretty good, and the stock market seems to be soaring. Do you look around this economy and see the funds rate being restrictive?
So that's your second question. I'm going to give the same answer that I gave before. I'd say as I think about the conduct of policy, what matters is what's the effect of policy. Not what do we say, but what happens. And the best way I can describe it is it's uneven. I do see some restrictiveness in things like housing. It's hard to use those same words anywhere else. I'll just make one other point. You talked about one of our dual mandates on the employment side. I don't believe that we have a cruel choice. I don't share the view that was expressed a few generations ago that Federal Reserve chairmen show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher inflation to put more people at work. I don't believe in that. What I believe is if we do our job, we can make strong growth, low prices, and strong employment mutually compatible. And so what you heard from the committee today is we've got some work to do on this price stability front.
Nick.
Thank you, Nick Timmeros with Wall Street Journal. Chairman Warsh, you've said repeatedly credibility is earned by delivering. If credibility requires delivering, the move would be to tighten or at least to threaten to. Now, you didn't do that today. Why not?
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks. We'll take up the issue again.
And if I could ask about AI, the build-out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question. At the central bank and an economics profession, what we spend most of our time doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it. What we do, though, is we infer supply. You'll notice in the second paragraph of what one of your colleagues described as a very short statement, we have a sentence on the demand side and a sentence about the same length on the supply side. They're both important. Just because we can count one better than the other doesn't mean we're going to favor one more than the other. With respect to AI and the growth of data centers and infrastructure around it, we're counting the demand side, and it is no doubt showing up in GDP figures. We can be less certain when we infer the timing and extent of the growth in the supply side. It may well be an intuition the supply side is going to expand, but it'll take longer. I just described it this way. There's a race between supply and demand. Milton Friedman says that the only thing we know about economics is that there's a supply line and a demand line they ultimately cross. When they cross and what are the implications for policy? The good news for you is we have a task force for that.
Andrew.
Thanks, Mr. Chairman. It sounded like on the task force on data that you were looking at overhauling or completely overhauling the system of national accounts, the way the government mines the economy. Is that your ambition?
In a word, no. In a few words, much of this data gathering happens in other government agencies to which we owe a tremendous amount of respect, tremendous amount of deference. But if in the course of this we come up with recommendations, which Fed staff have already begun to develop, about things that they could be doing to help inform us as policymakers, we're not going to hesitate. Again, I don't want to try to delineate the four corners of the research of the task force on data, but I do think there will be a review of official statistics, and at least as important, a view of bringing the best practices from the private sector and new analytical tools made possible by AI, so we can forge these into a fabric that gives us better real-time information. So as I mentioned before, when we're making decisions that we'd say are real contemporaneous data, not data that we call contemporaneous, that's really an echo of history.
Okay, thanks. The other question I wanted to ask is related to the building renovations. Are you considering any changes to the renovations, the projects, just in light of the fact that they became kind of a political football in the last year?
I heard something about that. I don't think I'm breaking any news, but my view, when you show up at a new institution, you should go meet with the Inspector General, just as a matter of good practice. It's a practice that I hope to continue. I've had one meeting with the Inspector General, and he told me what I believe the world knows, which he'll be coming out with a report on the building and the building projects at some point later this summer. I'll be interested in reading the report. From my perspective, with a forward-looking glance, is there anything that we can be doing or should be doing from this moment until the completion of the project to do what we can to be good stewards of taxpayer money and make sure that we're delivering on the promises that we made? Some more work to do. You might not be surprised in the first few weeks. I've been somewhat preoccupied on other matters, but I promised to get to the full breadth of the Fed's tasks in the weeks ahead.
Hi, Victoria Guida with Politico. So I know that you did not submit a forecast, but you are the person who is authorized to speak on behalf of the FOMC. So I'm wondering if you could tell us, in the SEP, the increase in the expectations for inflation, is that all because of the Iran war? What was the discussion around what would the expectations for inflation being higher and also potentially growth being slower?
So my read of what I heard in the room reflected, I must admit, in the SEPs, is half of my colleagues thought the policy rate, given all those developments, should be at this level or lower between now and year end, and the other half thought higher. That 19th voter was me, and I didn't submit one. There's a range of views on the questions of first and second round effects, no resolution or conviction, but we'll be meeting again in 6 weeks. I think we're going to know more then, and I think that my colleagues are very attentive to incoming developments between now and then.
And can I just quick follow up on the SEP? You said that you're still encouraging your fellow committee members to submit forecasts even if you're not doing it. So what do you think is the benefit of them doing it even if you don't?
That's the commitment that the FOMC made, and it's a commitment that I hope we live up to. Commitment we made was to deliver price stability. I expect us to live up to it. By the time we get to the end of this year, as I mentioned, I wouldn't be surprised if there was a new communications framework. There were some changes to the SEP. That's a committee discussion, a robust discussion. I think we'll have it. I believe we're going to come to a better mix of communications to deliver on what we promised, but I wouldn't want to prejudge what those are. But between now and then, I would continue to expect colleagues to submit their SEPs. Some of them, I think, believe that the practice is currently structured is okay, but I heard a lot of interest in real reform, generally about all these topics. You didn't ask it, but I'll answer. It was a pretty gracious couple of days, and it's been a pretty warm few weeks. The institution wants to figure out how we can do better. The institution's going back to first principles, and I'm encouraged that what we've done in the statement, what we're thinking about doing with respect to the SEP, that instinct towards a new chapter is a real one, and by the end of the year, I hope we can put some points on the board, both in form and in substance of delivering.
And then for the last question.
Thank you, Mr. Chairman. Andy Curran, Bloomberg News. Could you guide us through, please, some of the principles that guide your own reaction function, and tell us a little bit about kind of conditions that you think when the Fed should respond?
It's going to be a very unsatisfactory answer to the final question. The Federal Reserve has a lot of responsibilities, not just in monetary policy, but in supervision and regulation, consumer affairs, and payments. My own view is our credibility comes from delivering on what we're saying we're going to do across everything we do. I've devoted more time in my first 3 weeks to monetary policy than all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility enhancement we have in monetary policy. When we deliver on our price stability objectives, which we will, the American people will feel as though the hardships that they've been living through, in part because of inflation the last 5 years, are in the rear view mirror, and that credibility will have dividends across what we do, and the institution will come to press conferences like this, always with an impetus to reform, always with an impetus to do better, but we're going to put some points on the board.
Mr. Chairman, on labour data in recent months, how would you sum up the labour market right now? Do you see it as stable and potentially a source of inflation? Thank you.
Yeah, so the committee, if I were to try to capture how the committee thought about it, the committee thought that the labor markets were stable. There were some people around the committee who thought that it was trending better than that. Trends matter more than data points. What's happening over 3 or 6 months matters more than any one data point, any one data release. And I'd say the jobs data has been moving in a good direction. If I heard one other thing around that subject over the course of the last couple of days, what I heard was that strong productivity-led growth is not something that we fear, but something we embrace. Thank you all very much.
Interesting. Task committee. Let's make a task committee now. Who advises us on going long? Task committee for going short. Okay. But think about it, guys. At the end, it's only interest rate which delivers. Any price stability, job market, or growth is through interest rate decision. You cut the rate, economy prospers, or whatever. People get a lot of money back in their pocket because they are paying less on the mortgage, less paying on the interest rate of any loans they take, and more money they have, more spending, more inflation. At the end, I think the true thing is rate cut or not. So the thing is no rate cut. Everything is blah 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 blah. Someone did mention in the chat though. I think it was Sonam Biggs. All I hear is blah 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 blah. Okay, let's switch on our news now. Yeah, overall, not so great day. I have some losing accounts. 2 of them. 2 are still there. I don't want to drain them. Leave it for tomorrow because the market is moving in the big range. Others, I have profits, so I don't mind. It was a crazy day today. I still don't think, I'm eager to go long in this market. Especially we have our weekly midpoint.
Trump says may put sanctions back on Russia.
Yeah, we have a weekly midpoint which is in play right now.
So again, Trump
Could
saying
come into
may put
play.
Russian oil sanctions back on. EIR&A on the MOU text says the US to immediately start lifting the naval blockade on Iran after signing and complete end of blockade within 30 days. And Trump concludes his remarks to reporters. And IR&A on the MOU text says during this period, ship traffic will return to pre-war levels.
Yeah, not excited, guys, to go long in this market. This market can find a new low today in the after hours, tomorrow at the open. We are coming right back down. Specific number, if you are interested in what number you are looking for on the downside, it is 29,954. Basically this gap fill from Sunday night market open. Yeah, the frustration is, even though market is coming down, you can see that it was not able to sustain any of those pop. Whenever it popped, it did sell off
says after
right
signing,
after.
Iran will take measures to its best ability to ensure safe passages of commercial ships between the Gulf and the Gulf of Oman.
But these squeezes we get along the way are nasty.
West Kerner 2 oil field with output of about 150,000 barrels per day to boost southern output.
Yeah, I mean, at the end, federal committees, they have only one job, guys, control the interest rate. All other things are bullshit, like, fancy terms, as you mentioned, right? Task force, this, that. Fucking, are you cutting rate or not? If you are not cutting rate, how are you different from Powell? Cut the damn rate. If you're really trying to make a statement that after cutting rate also prices can be controlled, inflation can be controlled, cut the rate and show. You cut the rate and inflation is not going up. You bring the interest rate to zero if you want, and show the world that you still manage to keep the inflation under 2% and whatnot. This tactical meetings or tactical comments and all. Fed may have history of 200 years. I don't know what is the origination when the Fed came into existence, US Fed. Don't you think there have been many such instances of rate hike, rate cut, debates in those 200 years of its existence? It's always the same. They have one job, right? just cut the rate. If you are brought in replacing Powell, cut the rate. If you think that man did not deliver, he was just all talks, no work, you cut the rate. First meeting, make a statement, give a statement, give communication to the market. Fuck that Iran war, fuck everyone, fuck Bitcoin, fuck SpaceX, I cut the rate. Fuck AI. Markets are smart. Markets are not going to buy any bullshit. They will price in. They will price in everything. They will see the real situation on the ground. Task force or no task force, they will do their job. Markets will send their message to the Fed that the interest rates will or require to go up, right? If things don't stabilize. forget rate cut, you may have to hike the rate before year end or next year at least. Told you this market is coming down. So yeah, this is my frustration. In spite of knowing, in spite of picking the right side, I still lost a couple of trades because the squeeze was unbelievable. Look at that squeeze they did. At the end, it's still coming down. It is supposed to come down, guys. The eventual destination is this one. Like I don't need a task force for it, right? Eventual destination is this. It tagged perfectly to the penny, and final destination is this one. It achieved its objective on the upside market, and it is coming right back down to its square one. Yeah. And again, right, if I don't trade the right size, even having this knowledge was of no use, right? I still managed to blow 2 accounts today. 2 are still there. They have drawdown. I'll recover them. I'll slowly recover them. Not in this volatility now. But yeah, as far as the direction is concerned, strategy is concerned, no doubt, that this market was not there to stay up. So ES midpoint coming first. How do you like it now, this shot? When I do it with the small size, yeah, you get brilliant, big moves also. Fed was put into place in 1913. Thanks for checking or letting us know. Maybe you already knew.
The S&P 500 sinks to a session low, down 1%.
It had to sink to the session lows. There was no business staying up for S&P and Nasdaq both. It's still coming down one more time. Robert, I made you a short trader now. I turned you into a short trader. You're welcome. Yeah, I mean, guys, I have been telling my members, especially in New Paradigm Group, this market is done, guys. This market is done going up. Whatever is the upside, we already achieved this week. Yes, we can live with dissatisfaction that it missed its upper edge by few pennies there. And look at that. Now you know why ES is such a disappointment. There's nothing wrong with my numbers, guys. If my numbers were wrong, why would Nasdaq absolutely to the penny hit that? Why would Dow Jones absolutely to the penny hit that back off? And now look at that, everything coming down. This market was not staying up. We achieved objectives on the upside. We are coming right back down. So any pop here are again still temporary pops. We are still rotating down until we hit that ES midpoint to the penny, Nasdaq midpoint to the penny by tomorrow morning. ES again, yeah, it backed off just before it hit the midpoint. That's why, guys, with ES you have to be little careful. It will still come down, but I think Navin got frustrated with this one. Like why there is a need for another bounce before it hits this number. ES has this tendency. That's why we always put ES in that bucket, right? ES has tendency of disappointing. It's a huge order flow is huge in ES. It is not, if something comes ahead of our level, it has to be really huge. It has to be really big block, and once you hit that big block, it could be difficult to get past that block, because then the triggering, that selling B gets selling, buying B gets buying, kicks in. With Nasdaq, no, the ladder is very thin. Once it sets eye on a big target, there's nothing which can come in between. It goes for that number. So yeah, this is very important for me. Like, if I have an opinion, was there any material, was there any meaning to my that short biasness I have been having in this market? Absolutely. Look at this market, absolutely selling. Since yesterday I have been short in the market. All that being said, sizing is really important, guys. The moment I size up, you can see, right? The moment I try to, like, I get frustrated if I try to size to recover my loss. Even I am in the similar boat like you guys. Nobody is immune to drawdowns. Nobody is immune to losses if you are trading emotionally or if you are oversizing. The moment I went to the smaller size 1 or 2 micro, I was able to capture all the big moves, and I was, in fact, all the big profits you see today are coming from the small size. Any big losses you are seeing is because of the big size. The wins have been based on the small size, but the losses have been based on the big size. That tells you that there's no point in sizing up. If you are not going to win, even with the big size, you are not going to win. And when you win, even with a small size, it's going to be very fulfilling, very satisfying gains. Gold played out beautifully for you. Yeah. So 3:30, another couple of minutes. I generally don't want to trade after 3:30. So ES has hit the midpoint, guys, to the penny, and we can reverse here. Temporarily, we can find a reversal. So that's our ES midpoint getting tagged, and that's the reaction you are getting in the market. Always to the penny. Is it a time to say goodbye? Technically, yes. It's 3:30. Our midpoint is hit. I don't feel comfortable going long. Even if the midpoint is hit, Nasdaq's midpoint still has room on the downside. But yeah, temporarily we can go up. Story of my life around what? Losing big and winning small. Sizing is the key. I think this statement, these statements or these things have been repeated so many times, right? Cut the loss, walk away with the losing day. But sizing is the key, in my opinion. It does not matter. You have a big losing, you did not cut the trade for 100 point. But if you're trading 1 micro, it's okay. 100 point loss is just $200, right? The key is sizing. You have to keep size small when you lose. There's no long, guys. There's no long in this market. Even though ES midpoint was hit, we got a small temporary dead cat bounce from there. Nasdaq midpoint is still to come. There's still more downside in this market. Hit the like button, guys, if you enjoyed the show. It's not an easy day to be trading. Trading live is very difficult, especially when you have a losing day or not out and out green day. It's tough for me also, but I'm okay. I'm used to now. I'm used to. The only thing I'm proud about is now I don't have like all out, blow all the account. There's no way you can get back in the game kind of a losing day anymore. Yeah, 2 accounts blown. Those with 3,000 loss are blown already. The ones with 2,900, 2,600 loss, they are still active. I'll try to revive them with smaller size tomorrow, but others they are still intact, no damage done to those account, and that is what I look for on a losing day. You need to be losing gracefully. It cannot be like, it's over, like you are now back 3 weeks, 2 months in the journey, and no, not like that anymore. At least in the year 3, 4, no. In the year 1, I understand it could be tough to have graceful small losing days, but with the knowledge, knowing that this market, what it is capable of, we at least kept it under control.
US 2-year yield rises to 4.2%, the highest since February 2025.
So ES is getting hammered more, in my opinion, right now. As compared to Nasdaq, ES is taking more beating. Yeah, no doubt. ES down 1.1% or 1.2% now. Nasdaq is down only 0.6%.
The yen slides to weakest level versus the dollar since July 2024. The Nasdaq 100 falls to a session low, down 0.7%. And US stocks extend fall, the Dow Jones down 1%.
Makes sense now, guys, why we were short bias. This market was not going to stay up at all today. Any small pops or big pop you're seeing were just like fucking big money trying to squeeze short. Once they got the squeeze done, look at that. Who is interested in this market? Nobody. Nobody wants to buy this. Don't try to take double bottom. There's no double bottom here. Oh, I'm just looking for the squeeze. Maybe shorts will get squeezed again. There are no shorts here. It's free fall. Then how the market is coming down? Just algo is bringing it down. You're running through long and their stop losses. Are we short? No, I mean scary to short now. It's just algos now running through stop losses. Yeah, gold, I saw it came into our weekly midpoint. Yeah. Told you. Just a dead cat bounce. Coming down. Right into our midpoint. What would you do without levels? We were without that levels this morning, right? There was 160 points without any level for us, and how difficult it was today to trade the open because there were no levels between 30,480 and 30,313. So 170 points, there were no levels in between, and the world does not realize. Indeed, that is not the problem. Like, levels are like really fucking hack. The world is still not realizing it. They still don't want to buy into my levels, and they still, I don't know, still they think like conventional indicators are much better. This is like period. This is happening. Target filled. Delivered. Midpoint delivered. Mic drop. Run out of mics now. We have dropped so many mics. Anyway, every dog has their day. My day will also come. These dogs' day are also going to come. It's already there, but world is not recognizing it right now. What I have built is like really unbelievable. Members know it, masters know it, new paradigm members know it absolutely. It's not easy, guys. Without this kind of knowledge, you cannot short the market. You cannot short the market. It's very difficult to short the market. Hit the like button, guys. At least do that. Don't do much. At least get the like button. Click. It's still helpful for me. Thanks, Mark. You're welcome. So just seeing if there is any reaction of the midpoint, but in this momentum I doubt it will be a lucky bounce if it happens, because the momentum is too strong right now towards the downside. But you may never know, right? It's at least a retest of 30,000. That is what I'm looking for. Big round number from our midpoint. 30,000. Our master's level is just above it. Look at that. Trying to bounce off the midpoint. Tremendous selling pressure, yet it is trying to make an attempt. It's midpoint. Our digit is midpoint. I want to bounce. I will bounce. Let me bounce. Don't do it. World won't believe it. If you bounce, it's tremendous selling pressure right now. How could you think of bouncing here? If any place this market was capable of bouncing or putting green candle, that is the place. But it's just a dead cat bounce. The momentum is tremendous towards the downside right now. But there's no problem in trailing. Yeah, it's too strong right now. Momentum is too strong towards the downside. Anyway, guys, so let's call it a day here. Imbalance in few minutes. Okay, you want to hear imbalance and then we'll call it a day. I don't think I'll take another trade, but I'll wait until you hear the imbalance. Don't stay short, guys. This is our midpoint. There is, as I mentioned, right, if any location market can bounce, it is this location where it is capable of bouncing. I did not entertain longs, but this is one place where I didn't mind entertaining a long trade. Well done, Naveen. Good, congratulations. I think you're getting there to the second base. First base is like, at least like, win, make some payout. You did that. Second base, on a losing day, you don't blow all your accounts, right? Have, a graceful, respectable losing day. In my case, I trade many accounts. So it's okay for me if I blow 1 or 2 accounts or 3 accounts, 4 accounts maximum. I don't want to go beyond them. That's a defined, right? Limit, like 4 accounts gone, you stop. 3 accounts gone, maximum 4, stop trading. Focus on the accounts which are in green, trade smaller size, reduce your size. Because I know like tomorrow it's going to be normal price action and I'm going to win again. So why on a losing day damage everything and live like not survive to live another day, right? Yeah, once in a while big event, big moves are going to trouble. But yeah, most of the time we know. Look at this, guys. I told you, right? The only place where it is capable of bouncing is here. And you are getting the reaction now. How do you like that?
One minute remaining for the market on close imbalance. Ten seconds. Market on close imbalance. S&P 500 sell side 2.4 billion, Nasdaq 100 sell side 2.4 billion, Dow 30 sell side 559 million, Mag 7 sell side 692 million.